everyone, and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Let's start with a look at the markets, and as you can see on the screen now, we've got the Reuters terminal, Reuters icon terminal, right in front of you. This got all the prices and some breaking news that we've got today. And I think the key theme that we're really seeing in the markets today is one of risk aversion. We've got most European equity markets trading in the red. The FTSE's trading in the green, but I think that's really being supported by the gains in your commodity markets, particularly in oil. And same in the US, we've got oil helping these markets higher, but also I think we're seeing some of the defensive stocks as well really leading the way. So while we are seeing some equity markets in the green, I do think this is more of a defensive play that we're seeing today, and we're not necessarily seeing any major advances either. On top of that, you can see that the S&P is trading near record highs as well, and maybe that's going to start to lend into these marginal moves higher. The markets clearly don't seem certain about a move to record territory at this stage, although if we do see a move beyond those record levels, then that could provide the impetus for some more significant gains. As I said, we're seeing some decent gains in crude oil today off the back of yesterday's API crude inventories figure, but also the EIA figure today confirming that drawdown of over 3 million barrels, I think, last week. So again, suggesting that these oil disruptions, oil supply disruptions, are actually having an impact on the market, balancing the market out, as OPEC alluded to in the last couple of weeks. In the currency market, again, we're seeing that risk averse play. We are seeing the yen gaining against the dollar, the euro, and the pound. We're seeing the Swissy being favoured as well. Little movement in the pound today. We've had no real Brexit or EU referendum news today. We saw the debate last night between the Nigel Farage and David Cameron both face audience questions, and it was a pretty dull event. In all honesty, nothing really gained from this particular event, and I think that's why we've seen such a little reaction today in the markets to that. But aside from that, like I say, we're just seeing risk aversion with those gains in crude, and of course we're seeing gains across the commodity markets really potentially being helped by the weakness in the dollar. We can see bond yields as well coming off slightly, and again that lends into that whole risk aversion play. But if we take a look at the economic calendar next, we have had some notable pieces of economic data out so far today. We started overnight with the Chinese trade balance figures, exports falling more than expected. That was driven by weaker demand simply for Chinese goods, which is a concern, but it also does lend into the belief that we are seeing slower global trade at the moment, slower global growth. So this really is just for further confirmation of this. We did see imports fall at a much slower rate than we were expecting, and I think there's a couple of reasons that feed into that. Potentially we're seeing healthier demand in China, but I think this is also going to be a commodity story as well. The fact that we've seen a rebound in commodity prices, and China is a massive importer of raw materials. When we see that rebound higher, we're going to see effectively the opposite impact that we saw over the last 12 months, which was we saw imports dramatically falling because commodity prices and raw material prices were lower. Now that we're seeing them rebound, I think you're going to start to see that more in the imports data. We've had some manufacturing and industrial production figures from the UK, and again we saw some decent figures here for April. Now this is just one piece of data, so we can't really read into an individual piece of data, but it does look quite good, especially given that it comes just before this referendum when we were expecting to see a lot more weakness in the data. It'll be interesting to see if this continues into May. A large chunk of the industrial production boost did come from the manufacturing sector. Two things worth noting here though. One is that industrial production only equates to 14.9% of UK GDP, so it's quite a small section of the economy, especially compared to services sector, which is just below 79%. So clearly a far more important component of the economy. But I guess the flip side to that is it's usually when you start to see an improvement in the economy, when you start to see a recovery in the economy, you too tend to see this reflected in the industrial production data before you see it reflected in the others. So if we can see 2 or 3 months of data like this, then this could suggest that we're going to be in for a good second half of the year in the UK, especially if we remain within the within the EU, and the uncertainty associated with the referendum subsides. We've also had the GDP estimate from an IESR for the UK for the 3 months to May. That was at 0.5%, so a slight rebound here, which is a positive. JOLTS job openings actually rose last month to 5.788 million in the US, so some positive labour market data there, which may suggest that Friday payrolls figure was a one-off. Clearly, there's opportunities for job creation in the US still, and this figure does continue to rise. This would have been the first decline had it come in line with expectations in 5 months. So the fact that we've seen another climb here would suggest that the job market is a lot healthier than Friday's jobs report would otherwise have suggested. The other notable release today was the EIA crude oil inventories, which again we've touched on. That's what's leading to this rally in WTI and Brent crude today. The fact that we had a larger drawdown than was anticipated, and one that was in line with the drawdown which we got from the API figure yesterday evening. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.